Hello?
Hi,
Say
sir.
hello. Yes.
Hello?
Hello, sir.
How are you, sir?
Okay, let's go on.
Hello.
Let's go on. Let's finish this last session. Want to look on the effect of double entry system, like what we have previously discussed. That we've got assets, liabilities, and capital. Then want to look on the double. Let's first look on the double entry rules. The double entry rules. Who can read these rules for us?
For every transaction,
Okay, you can speak loudly. We are waiting.
for every transaction, there must be a debit and a credit entry. It is an improvement on the use of the accounting equation.
Continue.
The equation becomes an inconvenience when volume of a business increases. Business transactions are recorded in the ledger accounts instead of on the equation. A sample of a business model is used where the ledger is the main only book maintained. I think I'm done.
You are not done. Okay, Mr. Sisabano,
It's Mkumamombe.
Mr. Mkumamombe.
Yes.
Yeah, a very long name and the unique one.
Yeah. Yes.
So at the grade 1 level, it means the you have a very, very, very long, a very big cut.
Yeah, still means food.
Okay, I'm joking. Okay, we are saying for every transaction there must be a debit and a credit entry, which means that somebody bought, receive, and somebody supposed to give. It is an improvement on the issue of accounting equation, so it is very important to know that you're supposed to have what the two entries. Then the equation becomes an inconvenience when the volume of business increases. Business transactions are recorded in the ledger account instead of the what? The equation. Because we are doing we've got main transactions, so they need to be recorded on the ledger account. A simple business model exists when the ledger is the main only book maintained. Okay. Ledger layout here. They've got date, details, folio, amount. This one on the debit side. On the debit side is on to our left, then the credit to our right. Then give inside, Then you are saying, so you need to write when you are recording, let's say you have got your own Kanban, Mr. Mkumamombe is entity here. Means you should have the date for every transaction, then the details, then the folio, then the amount on the debit side, and it's also supposed to be corresponded on the credit side. The transaction increase or decrease assets, liabilities, or capital. Recording increases and decreases in assets and liabilities. To increase an asset account, make a debt entry. I think we discussed on it to say when an asset account is increasing, make a debt what entry. To reduce an asset, make a credit entry. Those are some of the rules which you're supposed to understand. You're supposed to know, to make sure that you grasp this concept. To increase a liability, make a credit entry. So a liability, you should make a credit entry because it's opposite. Because we are saying asset is equal to liabilities plus capital. So the assets, when they are increased, you debit, make a debt entry. But when a liability is increased, you make a credit entry. To reduce a liability, make a debt entry. It's clear. To increase capital, make a credit entry. Liabilities and capital, they are similar the way they are being treated. Because of the earlier equation, which we said, asset is called liability plus capital. They oppose liability plus capital, they oppose the what? The asset. All assets are being purchased through capital or liabilities. For you to acquire a motor vehicle, it's either from your own resources, which is invested into the business, or the liabilities. Then the following table gives a summary of the above. Account to record entry in the account, assets, an increase, entry in the account, debit. To assets, a decrease, entry in the account, credit. Liabilities, an increase, you credit, a decrease, debit. Capital, an increase, then end of the account, you credit. Capital, a decrease in capital, debited. Okay, then so like what I said, we are supposed to move step by step, ladder, like climbing up the ladder. Let's go on here. Who can now read this one? Who can read this one for us? Any volunteer? Any volunteer to read? Anyone?
Can I read again? Can I read again?
Yes, I can. You can push.
Okay. There's an example there. The books of BJ for the month of May 2018. On 1 May, started a business with 25,000 in the bank. Then on 3 May, we bought equipment on account from HS amounting to 12,000. On 4 May, we withdrew 150 cash and put it into cash book. On 7 May, we bought. Sorry.
Yeah, on the right track.
Okay. On 7 May, bought a van paying by check 6.8. On 10 May, sold equipment. So the extra, I don't know, it costs 1.12 to RJ on account. On 21 May, returned equipment to HS worth 2.3. On 28 May, RJ paid the business by check 1.1 owed by him. On 30 May, bought a motor van paying by check 4.3. On 31 May, paid 9.7 to HS by check. Maybe there are other transactions, but I don't know. I'm not seeing them.
Okay, what you can do now, start by understanding here, starting a business with 25,000. Which two accounts to be affected here? That's
The
the
capital.
which two accounts to be affected?
Capital in bank.
The capital account and the bank account.
Capital and bank,
Yes.
capital and bank. Next, this one. What equipment on account?
We debit the equipment and then we credit HS. HS is a creditor, a trade payable.
So you've got assets here and what? Liability. Also created liability, see. Okay. Next,
Cash 150 and put it into the cash book. So let's put it here with the draw 150 cash and put it into the cash book.
Bank. You withdraw money from the bank. What is the master's cash? Bank account. Cash.
okay. Withdrew 150 cash and it's a transfer of an asset
Yes.
to another asset and removing money from what? Bank account to what? To cash and and you've got bank and
Cash account.
and
Yes.
so it's bank and what? Cash. All these are asset accounts. But even
So we are debiting the bank and the credit. Yeah.
We debit
We are
the
debiting.
bank and
We are
bank
crediting.
I take, you cannot debit the bank when you are buying credit.
We are crediting. We credit the bank and debit the cash account.
So it's then and what? Bank and
it's bank.
then next.
Sold equipment at cost to RJ on account. We credit the equipment and then we debit RJ.
And equipment accounting and bank receipt. Our books and our books is equipment account lose this and that's credit. And our bank
Yes.
okay.
Yes.
Then in returned equipment to HS we bought what? 12,000. Then we wait to return the equipment. Credit equipment and
Yes, we credit
by account. So we reduce our what?
our
Equipment.
Our liabilities and
Yes.
what by this one, by this account. So it means you are going to decrease your equipment account and also decrease
Yes.
what account and because we were owing more before. So decrease both.
Flow in green flow out and it Russian.
Don't worry, our own account. We are not looking on other people's account. But we want to first identify the classification of that transaction. We are borrowing from the previous what concept. RJ paid the business by check owed by him. Our bank receives and Hey, order, hey. Bought a motor vehicle, a motor van by and paying by check. So we have got the MV and bank here. Here I just identifying the account. Then here paid 9,700 to HS by check. And now paying HS where you borrowed here say 12,000. So I now pay 9,700. So there are two accounts here again to be affected. So there's an asset and liabilities again. Okay, let's go on plans of action. You debt bank 25,000 received. Credit capital 25,000. DR equipment 12,000 because they are buying. Then you credit HS 12,000. Who is our on this part of liability. Then DR cash is receiving. You credit bank transfer. These are general entries. RJ 110, then you credit what equipment because the RJ is receiving the equipment and you are crediting the equipment. DRHS 2300, then you credit equipment 2300. DR bank 1100, credit RJ 1100. Motor van DR debt van credit bank is given. HS is receiving 9,700. Bank is giving 9,700. Then accounts. Bank accounts. You open only one bank account. So every transaction which was included by the bank, it should become to this what account. Every transaction, it should be involved. It should become what to this. So in bank accounts, what we do here, capital, bank received 1,500. Let's highlight using green. Then RJ paid 1,100 to us. These are transactions which are well here to say. Bank started a business 25,000. Then bank receives. Then sold equipment 1,100. RJ paid. So only bank want only what we received and what we paid. You only need cash movement. You are talking about the cash movement. Then on the other side, we want what we paid. Bank here paid 150 to cash. Then you write 150. Then bank paid 6,800. Then you credit again. Then bank again bought motor van 4,300. Then you credit. Paid 9,700. Then you credit. Which means your accounts are now like this: 1,500. This one which you are talking about. Then I highlight this. Then 6,800. Then I highlight this. Then 9,700. I want the green color. Then HS, we are paying him. That is 9,000 what? 700. Then 4,300. Then balance carry. What we do, we add here plus here, 2,000, 26,100. Then we add this plus this plus this plus this. Then we subtract from 26,100 so that we get the balance carry down. So it means a 31, that is the amount which is there in our account. That is the amount which is there in our account. Balance carried down. We say 25,000 here plus 1,100 get 26,100. Then we add 150 plus 6,800 plus 9,700 plus 4,300. Then you subtract, you get 5,100. This one becomes your opening balance for the next month. This is the amount opening balance. This one, the opening balance. Then you have got cash account. Cash account it only received 150 here from bank. Then balance carried down 150. But there is no end transaction. There is anything indicated that cash was used or was exploited or was transferred somewhere else during the course of the month. So you got only one transaction here. So the balance carried down to 150. Capital account 25,000. There was no any capital which was introduced during the year. What we said, capital account has got a what? It's got a balance carried down. That was we have got a bank because it has got a credit balance. Bank 25,000 and the balance carried down. That is 25,000. Because there was no any new capital which was by that time which was introduced. Equipment, they bought equipment of 12,000. Unfortunately, they have to return another equipment to HS of 2,300. So it's a minus on the credit side. Then again, after that, they have to sell again another equipment to RJ again, which is 1,100. Then 12,000 minus 2,300 plus 1,100, then you get 8,600. 8,600 is the balance what carried down. So this is the value of the equipment because we sold 2,300, 1,100 to RJ, and we changed 2,300 again to HS. So this is the equipment which we have in our books at the end of the month. Then starting even balance brought down. Starting our van was 6,000 what? 800. 6,800 here from the van bought a van 6,800. Bought a van 4,300 because they are supposed to have a motor vehicle, one account for motor vehicle. So the motor vehicle here, that is highlight light here, and I'll also highlight the other. So you should make sure that you pick every transaction of motor vehicles. If you had sold, this is supposed to be posted to the credit side. If you acquire, that's the acquisition of those assets, it should be posted on the debit side. Okay. So here you posted this 6,800 plus 4,300. That's why here we have got because we did not dispose anything. But if there was a disposal, we're going to include it again that we have disposed such a van. So it was dates are so important. 7 May 6,800, 30 May 4,300. Then total 100 and what? 7,100. Then balance carrying down 11,000 what? 100. Then HS books, because HS at first HS at first he is equipment was credited because he gave us equipment 12,000. Then equipment was the other equipment was retained The other was what? Received demand from the bank, received equipment plus the man which was paid through check. Then we go on to RJ. RJ received equipment and he lost what? Money from the bank. Then we go on the trial balance. On the trial balance, we pick the balancing figure. So on the trial balance, we start here. Let's look on the bank. The bank is 5,150. So usually we start by capital. Capital 25,000, which is on the trial balance, which is on the credit what side, 25,000. Then you go to the bank, you go on and you pick 5,150, cash 150, equipment 8,600. That's the remaining. So you look at the balance and get what? Down. Then 11,100. That's why here you've got a trial balance like this. Bank 5,150, cash 1,150, equipment 8,600, capital 25,000, then 11,100. Then you add. So that is what you're supposed to do. So this is what you're supposed to follow. Add up both sides to find out the totals. Write down totals on the scratch paper. Deduct the smaller total from the larger total to find the balance. Now enter the balance on the side with a smaller total, like what we were saying. Any question? No. Any question?
No.
If you don't have any question, you need to go and do the assignment here. I think I have given you 2 assignments here. And I'll tell you how to submit them. Some they will never want to submit to write the homework. Any question? Hello? Ask where you didn't understand. Where exactly didn't understand? Es Rutendo.
Say.
Ask.
Hello. Hello.
Hello.
Hello.
Zanzi kudiwa ne assignment.
Pane yapiwa yanzi homework. Iri pamusoro so. Iri pamusoro so yaeningirikini. Idogadzirwa inonzi chikwai. Movement of financial position. Pazasi pe-exam. Then ipo papaita yakanzi assignment.
Iri pazasi pakanzi balancing of the ledger accounts.
And it's any
Nakuha is better.
iripa page one.
Page
Page 16.
page 16.
61.
51.
Okay. Hello. What we're saying here, if you were not following up, it becomes a problem. What you do when you are doing these accounts, we say, after you've been given this information, you need to identify which account has been affected, and need to identify is it an asset or liability or a capital. Then you should understand and go back here to say if it is an asset, it means if it receives, you increase it. If it gives it, you credit it. The liability, if it gives, you increase it. If it if you a liability, you credit it if it increases. You debit it if it decreases, like what we said. So when saying from these transactions which are there, we should come up with the following account, bank account, because we have got bank, but all transactions which affected bank, they should be recorded. All the amount which we receive through bank, they should be debited. And the amount which we pay, they should be credited. Everything which affects what bank, so you can check, you can go here looking for those. For example, here we have got 1 May, started the business 2,500. That is bank. Then the other bank which is there is withdraw money. So if we withdraw this money, this one is not going to be debited, it's going to be posted on the credit what side. What event paid by check is going to be what on the credit what side. So the equipment case there was no any cash transaction, we leave it. 21 retained is not affecting the bank. RJ paid business by check or by him. So RJ is now paying us, so we receive it. Then we debit the what? The bank account. Motor vehicle paying by check, it means we're supposed to credit the what? The credit side. Then paid 9,700 to HS by check. So it's check. So it means this one is supposed to what? Post it on the credit side again. Because they are paying. If you are paying, post it on the credit what? Side. Then equipment account. Equipment account one, you receive this one. That is 12,000. So you debit it. Then equipment account, you sold. So you credit it on the credit side. Then you retain. If you are retaining, it's no longer in your hands. Then you credit it again on the credit side. You post it on the credit side. Then this is the equipment account. Then you are going to see the amount of equipment which are going to there. That is your balancing figure. The balancing figure, you add that big figure, those small figures. Then you subtract to say the bigger figure minus the smaller figure. So you write the balance in what carry down. Cash account, you only received once, so the balance brought down and carried down is the same 150. That's why I'm saying here on this account, bank, these are transactions are credit because this one you received and here you paid. Cash account, that's this. Then capital account, it has got credit balance. So bank 2,000, 25,000. Then balance carried down 25,000. Equipment, like what I said, this one was received equipment. This was disposed 1,100, and this one was paid. So you need to record those transactions according to the date. Then you bought twice, so you what is an asset. Go to the debit, then the figure here, balancing figure. That's what we want. Equipment, HS we write it because HS gave us at first you bought the equipment 12,000. he was losing. Then you paid him bank and returned the other equipment. RJ account, we gave him equipment received and he paid bank. So he lost what? Money from the bank. Then bank 5,150. These are balancing figures. We add this plus this 26,100. Then we add this plus this plus this. Then we say 26,100 minus these figures. Then you get 5,150. This one, that's what which we are supposed to write on our trial balance. The balance in what figure? The same to cash and equipment. Capital here, this one's correct. Bonds correct. So that's what we're supposed to do. To earn persons. Any person? Any person, please? Hello? Any person?
Tanzwisisa. Hayi ndanzwisisa.
Wanzwisisa?
Yeah.
Better if you now understood. So it's simple, but you have to make sure that you classify, the account. Like what I said to say, it's like climbing up the ladder. That's why I find out we started by simple thing of identifying an asset, identifying a liability, identifying a capital. So that you can borrow from that. So when you are going to the next stage, it now becomes very simple because what you now need is to identify the class of the account. Say it's an asset. So it's an asset, it's being reduced. What is supposed to be done? When it is now increasing, what is supposed to be done? So you collect what you grouped according to the asset. This motor vehicles, you create what? One account so that you can able to find out the balance of the motor vehicle supposed to be posted on the trial balance. Okay, any other questions? Was one to move together? If there is no person, can you go and do
No, sir.
The assignment here should be done so that you practice. Practice makes perfect. Okay, thanks for your time. We will meet again in the next lecture. I'll try to send this one to share with you this one on your Google Drive or on the Google, or I give you the link or on the group. I'll try to share with you this information, this recorded lecture, so that you can continuously revisit it. Thank you for participation. Thank you very much for your cooperation. Well done. Have a blessed day. See you. Signing off.
Thank you.
Thank you too for coming.
Tafana wangu continue neikosi papa. Takanorowa ikosi.
Internet data man.
Right. Moving on to the next topic.
Zakatongo.